The following content is intended solely for informational purposes. The views expressed by hosts and guests are their own and do not necessarily represent those of Alea Research, its affiliates, or any organizations with which participants are associated. Nothing discussed should be construed as financial, legal, or investment advice. Viewers are encouraged to conduct their own analysis and consult professional advisors before making investment decisions. Welcome to a new Market Cap episode. Market cap is where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. I'm your host, Stefano, Director Institutional Services at Alea Research. And with me, I have Danning Sui, Research Director at Pantera Capital. So good to have you with us. Pantera Capital, founded in 2013, is recognized as the first U.S. institutional asset manager focused exclusively on blockchain technology. The firm invests across venture, early-stage tokens, and liquid strategies and has been a key player in the institutionalization of digital assets. Recently, Pantera expanded its research work around digital asset treasuries, DATs, building dedicated tools to track on-chain treasuries and benchmark this emerging segment. Danning, first off, welcome to the show. Great to have you with us finally. We've known each other quite some time right now. I've seen you being at different companies. So definitely an exciting career path you have been taking. But yeah, let's hand it over to you. Just tell us a little bit more about your background and how it all led to leading research initiatives at Pantera.
Yeah, thanks for having me. Really glad to be here. And also, good to see you, Stefano. Like we met probably 3 years ago in
Yeah.
DuneCon, and we were, I guess, both talking as a data analyst person or so. So yeah, since then I've been actually switching jobs in two places now at Pantera Capital. I was a data scientist starting my career at Consensus right after school, which is a early incubator for Ethereum ecosystem. Back then, I was mostly analyzing generic like metrics about the Ethereum network and how many new smart contracts and like applications being deployed. That was like 2018. There was not many to analyze, to be honest, but
Mhm.
quickly after DeFi boom happened, and so we started to like analyzing DEX, DeFi, and so I got really interested into like DEX sector, and so shifted my job towards Xerox Lab, which is the one of the early DEX aggregators, which is basically trying to like provide a better pricing for users who are trading in their front end Matcha or any other people who are using their API. But then from there, I got into a deeper rabbit hole, which is MEV. So yeah, as many people listening to the podcast may know or not, I don't know, like MEV was kind of like a hot term, I think like around 2020, 21, 22, basically kind of formalized as a concept by Flashbots, one of the organization that was basically pioneering on this like research of the landscape, where basically one of their founder, Phil Diane. He is a PhD student at Cornell. He basically published a paper saying that, hey, everything that's happening in TradFi, that was like written by Michael Lewis in this book called Flashboy, meaning like the big market maker are front running people or potentially like sandwiching people by seeing the privileged information in the transaction order flow and trying to profiting from it is happening now on DeFi. And so that was like such awakening call for a lot of people, realizing that there is such a unsolved problem that is like kind of like addressing like unfairness of the ordering in the transaction. So like, I mean, it's kind of not really privileged info, but like public info when users are submitting their transaction in public mempool, but it's still privileged in the sense that most people don't know how to really check mempool transactions, right? So
Yeah.
more sophisticated user will basically know how to leverage information and maybe insert transaction before and after, and so profiting from that. I think I got too excited. I'm like getting into rabbit hole again and like
No,
trying
no,
to.
not at all. This is great. This is very, very rich context. I actually remember that DoomCon, and you
Mhm.
were giving a talk on the DeFi landscape. It was very fascinating. But please continue.
Yeah. So, I mean, as you can see how the story develops, I got deeper into like analyzing like I guess researchy side like or macro market structure thing by
Mm,
looking at these stuff. And like the direct impact there is that like all the DEX users on 0x are basically suffering from like MEV sandwich bots potential like exploitation. If they're sending transaction in mempool, they might get sandwich and their trades will slip through the worst price they accept when they submit the transaction. So yeah, that leads me to Flashbots. And because Flashbots is such a research heavy organization, I started to get involved into like some research collaboration, and I also got like involved into this fellowship thing called TLDR, the latest in DeFi research. And so I was like basically crafting a bunch of research proposals and like problem space for analyzing like how can we solve the MEV problem better, and in adjacent to also the topic of PBS, like proposer builder separation, which is a basically Ethereum protocol, how to say, improvement that was being proposed by EF, Ethereum Foundation. It's kind of unsolved today still. So TLDR on that problem is basically that like after proof of stake, now Ethereum protocol now is more heavily indexing on who has the capital to be able to stake as a validator, so to propose a block. And so if you have also like the full authority of deciding how transactions to be sequenced, then you have too much of like dictating power to like basically accumulating as a centralizing force to be able to accumulate more money, profits, and also stake more. It's a big risk for the network as a centralizing force. So that's why proposer builder separation as an idea was proposed during the like I guess before the merge. And Flashbots launched this thing called Map Boost, which is an open source implementation of proposing and builder separation. And so from there on, now people are still trying to study what is the best economic incentive you can design to avoid that builder market now to not centralize. Because as of today, MEV Boost has been a huge success in terms of adoption. Basically, 95% of the validator market share or network share is using MEV Boost as an extra, basically software that they plug in when you like say run a validator at home as a solo validator. And but it is basically it makes sense because there's extra profits for MEV for validators. So why not they like why wouldn't they adopt that? But at the same time, we're seeing like block builder markets super centralized towards whoever are the sophisticated market maker who knows how to like optimize their latency to propose high value block at the very last millisecond, and also knows how to like play the market game to basically like say vertically integrated with the front end who has the most valuable flow, being like, hey, send your flow privately to us rather than like sending it to public mempool, sending it to everybody. So we can have an edge when we propose the block. So like a lot of fascinating problem there, but I think it's a little bit dystopian. It was a bit stale, I think, by the time I was leaving Flashbots for the whole PBS like word. Yeah, I think it's also open question still for people to study. But to zoom back a little bit, yeah, I recently switched to Pantera Capital thanks to
right.
all those like research experience that I developed at Flashbots. Um, Basically now I'm supporting the investment team at Pantera Capital as well as all the portfolio companies. So the research lab, I guess, or research team that I'm basically working at together with my teammate Alizak. She's used to be a research engineer from Missouri. Basically, we support both sides. One is helping the partners from investment team to do any like on-chain data due diligence, or like even basically like look into the deals that they're looking at and say if there's early sign of adoption on chain, but also not limited to on chain data. Yeah, at the same time, we also support portfolio company on the research side. So some, for example, like some of our portfolio company is trying to build MEV solution on Monad, and we're basically helping them to say if Monad as a different L1, which is like high performance chain, how would the MEV problem evolve, and what are the kind of new problem you may need to solve compared to the existing solution in Ethereum land. Or, for example, we have another portfolio company who is trying to design a pre-confirmation solution or like trying to price the block better on Solana. And so maybe we can help them empirically look at like how the gas distribution looked like in the past, and or help them to have better mechanism design in general. So yeah, that's kind of like a very convoluted like explanation of what I'm doing right now.
No, that's great. Actually, that also illustrates how wide your mandate really is, which makes me because Pantera is a huge company. Uh, so I can imagine lots of requests coming in. So that kind of makes me wonder, like, okay, how big is your team?
Yeah. So the official people in the team is just me and the other person, Ali. But every of our partner is like a researcher in some sort. So a
Okay.
lot of them, like Jay and Mason, a few others, like they constantly publish articles already. Recently, we did like a white paper reading club locally in SF to basically look into like X402, which was like such a hype in the past month. Jay was one of the guy. He wrote an article about it, so we basically like just like decomposing based on his understanding. So the answer is like everybody's kind of like thought partner, and so like also drive our direction of research. At the same time, we also expand towards all the universities that we kind of work with. So like currently we're discussing kind of like a fellowship initiative with this team called Open Lab in Stanford, which is led by like a Stanford professor. There's a lot of like mature research that is sitting on the shelf by all the researchers like who are either PhD students or professors from like Stanford, Columbia, Cornell. But they are maybe waiting for somebody to implement it or just like somebody who can find an angle in the industry to interpret it. So we're also actively having those collaborations.
Got it. Makes sense. So, okay. So in principle, it's YouTube, but there's a lot of support and resources available at your
Yeah.
disposal. That's
Yes.
great. Because I can't imagine you definitely like need that.
Yes.
Um, all right, moving on a little bit to zoom in just a little bit on Pantera before we get into the DAT dashboard you've built, which we want to talk about. Um, so yeah, at Pantera, like the investment approach spans the full spectrum, right, from blockchain assets, and its recent focus on DATs, I think, reflects a move towards this data-driven treasury management and institutional transparency. Um, so yeah, you also launched a DAT fund to give investors exposures to this category, right? So overall, like on a general level, how would you describe Pantera's current investment thesis as this market is maturing right
Yeah, I would see it as kind of like a hybrid of both venture capital investment and as well as liquid fund strategy,
now?
which I am also kind of proud, even though I wasn't participating, but like I think from afar, observing that Pantera actually always had this unique like liquid fund approach, which actually I believe out as general census, I didn't check the data, outperformed pretty much compared to other venture fund because like venture fund usually will have a longer cycle to really like, mature, have the next round raised, and actually see the value growth on the paper even, and not mention even like the exit. But liquid fund is basically say you analyze the fundamentals and like the thesis under a potential token that is already launched, and to see if you believe that this token will grow in a relatively middle term, I guess like short term or so. Like a lot of all the time people criticize like VC being like not performing by just saying, hey, if I've had held BTC in its last cycle, I would have outperformed way better. But I mean, this is kind of like a wrong take, but it kind of makes sense in the liquid fund sense, right? Like I think liquid fund is a unique strategy. Pantera kind of like early on started. But at the same time, we're always definitely looking to like venture fund that is venture investment that's like early stage. Um, I would say because of the size of the fund, we're currently have like 5 billion under a basically AUM under asset under management. New terms for
Mhm.
people basically. We yeah we probably have like a minimum check size of something around like 4 or 5 million. So probably too early of a project will be hard for us to like invest unless we have really strong conviction. But at the same time, yeah, I think we also basically look into all kinds of sectors. So I think overall we're in sync with the market narrative. So, like last round we invest in a lot of like infrastructure, still strong how to say believer in infrastructure builders if there's like really a new like a demand for it. It doesn't make sense to invest in another L1 or L2 at the moment. I, as a research person who participates in the investment committee call, observes that like we've been investing in more, like stablecoin related things or like the framework or like stablecoin issuer type of a deal, as well as like I guess more consumer apps similar to like prediction markets or like trading apps type of thing. So I feel like the like the thesis definitely shifts together with the market sentiments.
Yeah.
But overall, I think like early projects, yeah,
That's great. That's great. And that also, yeah, that kind of leads me to our next question, right? Like, okay, you span all these different sectors and you're moving as the market develops and you've been leading that. Now we see this new development, or like we've seen this year, let's say, this new development of DATs, right?
hmm
Um, you guys created a fund for it. What can you tell
yeah.
us about the creation of, like, what led to that creation of that fund, and what gap are you trying to fill there?
Yeah, yeah, 100%. I think Pantera was one of the early pusher for that thesis. I think like kudos to Cosmo, but particularly who leads the liquid fund strategy in Pantera Capital. Um, Even though I think like the first East that was SharpLink and then BitMine, like we weren't yet like the first one that launched the DAT, but I believe we were like behind all those conversations early on. And I think like the thesis is quite straightforward, as how like Tom Lee and a few other like spokesperson being always like speaking about. Um, I think like that serves as a new type of investment vehicle. It's very innovative in the sense that it basically gives exposures to especially institutional investors, exposures to crypto when they are not
Mhm.
allowed to hold crypto yet. And you may argue that now in this cycle they can basically hold ETF, but that as a comparison actually has extra on-chain yields because ETFs underlying assets will have to be held in the custodian, and you can really basically move it around like however you want. But the debt company has the solely how to say basically freedom to do whatever with the crypto asset they're holding, and they can have like varying strategies to basically put it wherever with extra yields. At the same time, some people I know there's a lot of criticism about how to say DATs being like say pipe investors, meaning like the institutional investors will have access to buy shares before it even public with a much discounted price probably at the launch compared to the launch. And so for retail investors who come in later, does that mean the pipe investor is like dumping on the retail? And I think like it's just like kind of like a paranoid how to say sentiment. It's not necessarily true that like when pipe investors do have like some unlocking how to say handcuff, right? I don't deny there probably are dats of lower quality or people are do like basically kind of trying. I'm not saying it's a scam, but I feel like people are speculating by launching a DAT with like an asset that doesn't even make sense. Like I personally think a Barra DAT is nobody asked for, or yeah, any other I mean, no financial advice, and I'm not holding it assets, but um, I do think like the factors that can contribute to a strong DAT that makes sense is first the underlying asset value does hold for the long term and
Uh-huh.
actually how to say create value for its based on its underlying technology as well. So like Ethereum has the ecosystem, Bitcoin has its like positions as like the mainstream adoption already, and Solana now is basically supporting so many like high performance applications that retail are using actually. So like these stats make sense to me, and at the
Yep.
same time, it doesn't make sense to have like 500 stats for one asset neither. Like you can probably see already like by market principle that it will be like a 80-20 rule, right? Like in the end of the day, there's probably 2-3 DAs leading in one category, and all the other gonna potentially not survive for like through a few cycles of market shocks, similar to how like October 10th happened. And because okay, that actually goes in deeper into a bunch of metrics we might talk about later. But yeah.
Yeah, actually, I was gonna comment that, like, this segues very naturally to the dashboard you've been building and you're going to release soon. Um,
Mhm.
maybe we can share that right now and start getting into like some of the metrics you mentioned. Um, yeah, because like you have like this unique access through this DAT fund, but also like all your work at the research lab. And therefore you must have like a pretty unique sense, I think, of how this industry is evolving on the DAT front.
Mhm.
Uh,
Yeah.
yeah, let's it's right here.
Yeah, yeah. So I
But
just pulled up the screen.
yeah, yeah, just I think to start off, just like walk us through it. Like what can users expect to find here? I had
Yeah.
I had the privilege of having a look at it already, and I gotta say it's rich. Yeah.
Yeah. So I mean, like to start with the motivation of reason why we built this dashboard. There's already a bunch of dashboards out there that are pretty good. Shout out to them from like Blockworks, from Artemis. There's another one from DeFi Llama. We thought that some of those metrics are like pretty good, but but also could use some adjustment. So some stuff to point out, for example, like most of the dashboard we mentioned just now was not tracking like pro forma number. So basically, like say they were tracking the outstanding shares in the market, but they weren't really tracking what if some warrants are getting exercised today? How much would that dilute the market? Like what's the dilutive impact on that? And there are some other like very niche like caveats, but important to the metrics accounting. For example, like in DATs, oftentimes there are this concept called like pre-funded warrants. So like when institutional investors they have a deal structure, a deal with the DAT company, oftentimes beyond the DAT shares that were issued by the pipe, they also hold like a substantial amount of like warrants that can be outstanding the moment they exercise. And oftentimes they just preload the money in. So meaning like the proceeds from the warrants was already in the underlying NAV, like NAV as in net asset value.
Mm.
But at the same time, the outstanding shares are not counted towards the total share, which makes the MNAV, which is another popular concept for talking about DATs, lopsided. So basically, if you so actually maybe I'll just like quickly show a um article that I'm actually also preparing because like this one is kind of trying to serve as like a data guide. So everything we just kind of like talked about as like how to say vocabulary here. NAV is basically net asset value. Basically, how much value is this company holding? And MNAV is a popular metrics to measure that, which is the basically the divide between market cap and net asset value. So market
Okay.
cap divided by net asset value kind of measures how much is the market pricing this debt based on its net asset value. So like if a company has a MNAV over 1, that means the market is pricing it over than or above its like actual value. So which means the people who are holding or buying is buying at a premium. You're basically paying a kind of expensive price, but at the same time, it means the market is pretty bullish about this stat. And people are often worried about like when MNAV dropped below 1, which first of all, it doesn't quite make sense. Is not quite rational, right? Because if the company holds that amount of Bitcoin or Ethereum and it's worth of like 2 billion, how would that make sense? Like the people are like selling it below like the 2 billion value actually represents. I guess like it kind of represents more like a market like panic or so. And so it's really like two sides, however you want to see it. But go back to the dashboard. Um, we thought a lot of those dashboard could use maybe some improvement and also like an overall view towards the whole market sector. So we are here tracking 30 DATs total, and the total of these DATs has a total like 122 billion market cap. We also trying to promote this metrics called on-chain transparency index because we think like right now it's still quite early stage for DATs because um, the reporting of the data are quite messy, and not even most of the company are reporting like what are the wallets they're holding. If one day we can push them to share more transparency around like what are the wallets holding what assets at what chain, we can basically further track like how much on-chain yields they're generating, and so to bring more like confidence or like transparency towards the retail investors as well. So basically, we have a landing page that is kind of summarizing the leading DAT dashboards. Here, we're trying to compare among all the DAT stocks. How do they perform compared to also like the regular DAT, like how to say stocks? So it's like really trying to like say, how can we grow as a pie together rather than just competing within the DAT sector, being like, this DAT is better than the other one, like kind of like, trying to compete over each other. Our goal is actually having the DATs to be able to compete with the top 50 like stock price. At the same
Mhm.
time, we have this view where people can just like rank based on like which DAT is performing with the highest premium, or which one's basically losing how to say value with the highest discount also. Or you can like kind of like categorize them or rank them by MNAV or so, and you can download them as a CSV. So to basically promote more transparency and like accessibility of the data as well. And scrolling down, you can see like how the DAT market overall break down into different asset category. Granted, now there's probably like 200 crypto assets that has DATs. Right now, we're only tracking Bitcoin, Ethereum, Sol. We're hoping to definitely like gain more like category here as well. If like the asset itself is very solid. Hype has been a pretty good asset for this whole year, and I know there are like hype DATs. Um,
Yep.
I think it will still take time to see how long they will sustain, but I think it's worth considering. But and the charts here is also just like more summary, and I'm like hoping whoever is looking to the sector will use this kind of charts to put them in their slides, basically to show the growth of this sector, how total net asset value of the whole sector are growing over time, and this is another interesting one, which is basically to show how much are each category of the DATs are taking up a supply percentage of the crypto assets. So, for example, like Bitcoin right now has around like 4% of assets are held now by all these stats company, and a majority of it is by MicroStrategy, now named as Strategy. And Ethereum has been growing really quickly, so now it's around like 4 point something percent. 3% I believe also is by like Bitmine, Solana as well, climbing up pretty quickly. And I think this one further down can tell a really interesting intel, which is if a company is holding like large enough percentage of the supply of an asset, the movement of the company's stock price can even impact the assets underlying value, if that makes sense. Yeah. Like
Sure.
big movements from MicroStrategy oftentimes will become like a signal of Bitcoin price even. Um, so yeah, some other metrics based on like trading volume and market cap basically share. And so we have another like overall view per asset category. We're basically helping you to like basically look at the market share growth and competition within the same asset type and the MNAV over time. There are so many like gnarly stuff that's like challenges for accounting all this data correctly because
I
I
bet.
don't know how often you are querying on Dune these days, but like SEC filing data are a beast to fight against, like compared to on-chain data. We're so spoiled by like real-time reporting, like standardize the schema for the on-chain data. Like SEC filing, first of all, is not real time. It's not like not frequent, and it's like companies doesn't really like report it every even other week, except Bitmine. Shout out to them, like they really report really frequently, diligently. But yeah, most of the time it has a lag, and also different company put them in a different formatted like PDF, and basically you're doing NLP, like reg X the numbers out from all the texts. So like this again, shout out to like Ali who built all the scripts there. And then so basically, and two other major charts people look at is how these companies been growing their holding for the asset. I mean, the goal is basically to grow the company's underlying asset value, basically gain more shares in general, but at the same time also gain more shares. How does that gain more value per share, if that makes sense? This is the
Yes.
other chart here. But I want to say things we've learned through this whole analysis and like building the dashboard is that it's a double-sided sword for basically a higher Bitcoin per share or Ethereum per share because it's literally basically a leveraged exposure towards the crypto asset. Basically, if if one share of the stock represents 2 ETH, then that means it's 2x basically multiplier of the ETH price volatility of the crypto of the stock price you're holding, if that makes sense. So like if Ethereum has 2x today, the stock you're holding 4x, right? Because you have
Right.
2x exposure. So it's really, again, like it's a bullish call on the crypto if you're holding the DATs. You basically have to decide, you have two assumptions if you're holding a DAT. One, you believe in the underlying asset value in the long term. You think like the crypto value going to go up. Second, you believe in the company's capability to manage with a good strategy to grow the per share exposure to the crypto asset, which is, like two parts conviction call, basically. Um, and last but not least is this per company view. We wanted
Yeah.
to basically show high level metrics. For example, what are the balance sheet number and what are the shares outstanding, market metrics, as in like how much are being traded in the stock market and like the price and NAV per share, and dilutive impact, as I mentioned earlier, about like how much warrants are out there that can be exercised, and if they got exercised today, how much more share count there might be. And so you have to like factor that
Right.
in the actual like pro forma numbers. So we kind of like have a toggle here for you to be able to like look at both ways. And this is a feature that I'm really proud. It's like super simple. It's basically like a kind of like an Etherscan style listing of all the filing. And so you can kind of cross check on the facts by like going through their like 8K or 10Q, etc. The like actual real SEC filing documents. Um, yeah, so these are the two, I guess, like main charts we believe are kind of like more novel insights from us. I mean, um, shout outs to Foundestrat, which is a company where Tom Lee served as a president. We took the inspiration from one of the podcasts that we watched from his interview there, where he was basically trying to basically model the growth of stock price of DATs into a few factors. So
Mhm.
if you think about how these DATs company has been growing in terms of like price, there are a few factors, including how much ETH per share or crypto per share they've been holding, and if they've been growing or decreasing that value. And another factor would be how much that crypto asset value has been growing or dropping. So basically, that two together will construct their fundamental value, meaning like per share, what's the NAV value? Like if you're holding one share of BitMine, it is, let's see, it is right now $41, which is like closely tracking actually with their market pricing value. So there's another factor that's very important, plays a large role, is the NAV multiple. We kind of basically interpret it as the market sentiments. So starting from the day the DAT launched, it has a starting price. And so we assume from that day it's a starting point to benchmark their growth of ETH per share and ETH price. And so you would imagine basically the rest of the factor would be count towards NAV multiple. So from that day, if we've been seeing their ETH per share been growing steadily, and I mean, ETH price is an independent factor that sometimes grows, sometimes drop a little bit,
Mhm.
then you can basically attribute the rest of the change in the stock price towards the market sentiment, if that makes sense. So if you see that like the company's stock price has been kind of dropping, even though their fundamental value has been growing, like they've been growing ETH per share, you would know that it's not their fault. It's not the company has been performing badly. It's purely because they started at a peak or like a top of the cycle about like that company's narrative, right? And the market sentiment has been contracting. So that's, I think, is like novel insights we wanted to share, and kind of also just like correct people's misunderstanding about that, because like people has been putting their eyes on DATs pretty much around July, which
Yep.
is kind of like the high point of DATs already. And since then, DATs been like cooling down. So every company's like stock price has been dropping, but it's not necessarily saying like the DATs company been failing.
Okay, that's a great point. Yeah, it's all relative, like, right? Like where does your baseline start? If it starts at a high point, then everything else like that follows seems like disappointing when it doesn't have to be so.
Exactly. We were like looking through our charts to see like what are the companies being steadily growing, ETH per share or crypto per share. Bitmine is definitely, I think, the best in the category, and there are a few other like BTCS, COSM, ETHM in the Ethereum category, and for the Solana one, HSDT and UPXI. I don't know what's the best way to call them. Disclosure, HSDT actually is a Solana DAT that Pantera was participating in the formation. So we're like a
Okay.
heavy like affiliate with them. But the data speaks the facts, so I'm not just chilling it here. But yeah, I think like that is one thing we wanted to promote, and so to kind of correct people's understanding about DATs by just since everybody's only looking at MNAV. One other thing like developing further from that is like the theoretical fundamental price. So basically, it's following the same mental model where saying like starting from the day the DAT launched, if the market sentiment had stayed at the same level. So basically, as imagining that blue. Oh, I think. Sorry, I'm gonna share a screen real quick towards the blog post. Okay, so basically another metrics you can develop further from that mental model is the theoretical fundamental price. So if you basically assume the chart we saw earlier, if we like basically break the growth factor into 3 line charts, there is like the Bitcoin price going trend going through since the day it started. There's the Bitcoin per share price, and some company has been growing, some company has been pretty like flat. And there's the MNAV, which is the market sentiments layer, which is the blue line here. And if we see like MicroStrategy here, even though is like kind of fighting against like trending down market sentiments, they've been growing the Bitcoin per share overall, even since the day we start tracking. Of course, they started years ago. From the time series here, we start tracking. This is a trend for them. Um,
Got
so we think like this is a pretty good tool for people to understanding better what are the underlying value, fundamental value these stats being driving, and is the price bearish because just the market bearish about them, underpricing them, or is it actually they're losing value in terms of their company
it.
value? Yeah, and so one thing to construct further from that framework is this fundamental price, meaning like assuming the market sentiment has stayed the same way. So basically, assuming the blue line has been normalized to be 1 the whole time, what will be a theoretical price for these companies? And so we can kind of see, like for example, in the Bitcoin category, like most of them kind of stay flat, but like MicroStrategy actually is worth a little bit more how to say US dollar compared to the actual current price people are pricing it at. It makes sense compared to what we saw just earlier, where the blue line was dropping in general compared to the timing they launched. And like similar to like HSDT, which is like they've been growing their underlying asset value, which is like SO per share, but the price been dropping. But it's really like purely because of the market sentiment's been contracting since the time they launched.
Got
And
it.
yeah, and like similar to Bitmine, their value actually 2x compared to the time they launched it. And a few other like Ethereum machine, I believe, also is like kind of increasing a little bit. BTCS also as well.
So
BTBT game.
I guess another way to say it is that in those cases, those companies are now actually undervalued.
Yeah, I would say so. I would say like, yes, I think compared to the time how bullish the market was when they launched versus today, they're definitely undervaluing these
Gotcha.
assets. Yes. One other thing is we think that the way to evaluate a debt really should also be looking at how these companies being managing their strategies for issuing more shares and not how to say like manage the crisis, I guess, when the MNAV goes below 1. So basically, like if you think about the DAT thesis, it's kind of like a flywheel thesis where you say, okay, we will launch a DAT, there's a market cap, and there's a net asset value. And whenever the market goes a little bit crazy and the market cap goes above the actual net asset value, we will be able to share, how to say, issue a little bit more shares basically like dilute it a little bit, but not basically to lose the mark too much. And so when you
Mhm.
issue more shares, you get some proceeds, basically cash from the newly issued shares. With the cash, you can basically buy more crypto, and so to like put them into the underlying asset value. And at the same time, it helps the asset itself because you're holding more, and so the asset itself supposedly is going up.
Yep.
So it's kind of like the flying flywheel thing. But at the same time, people will be like, what happens when MNAV goes below one? The flywheel kind of breaks. And I think that's true, right? Like what you really have to manage it really carefully that first of all, when the MNAV goes above one, don't issue like insane amount of like shares, like dilute it crazily, right? And so the market will panic like if this company is just selling on us. And so you want to see a company that's issuing really carefully, like similar here. When we draw this chart, the blue dots line are the MNAV numbers. It might be a bit hard to see the numbers on the left side. And the yellow line is basically outstanding shares. And the best in the category here among all the e-stats is obviously BitMine, where you would see their issuing of the shares is very carefully
Yes.
incremental, very small steps, like a step function, rather than
Yep.
some other companies are like dropping like huge amount of like shares insane, and that will potentially crush the market confidence. Um, so yeah, I think like that's one thing. Like you want to see how the company manages their share issuance both way. One is like when the MNAV goes above one, to basically do it carefully. And when the MNAV drops below one or like dropping really crazily, you want to see the company to try stay defensible and like trying to not for sure not issue more shares, but also
Mhm.
potentially buy back shares. So to increase the per share value for the shareholders. And so to make the market come back with confidence a little bit, and so to struggle back to MNAV above one. And like we kind of see ETHZilla here was like kind of like doing that when they saw like a crazy dip here. So we saw
Right.
like a market like outstanding share drop here. But yeah, I think these visualization will largely help people to understand better about how to really look at that.
Wow. Absolutely. Like like I said at the beginning, the dashboard is very rich. I was gonna ask you like what are like insights that you've derived from all these yeah, from going through the data, right? And you already shared a lot of it. Um I guess going a little bit meta maybe. What do you think this type of data being available will also have like a further impact on how this segment how players in this segment can make decisions and how this segment will start behaving. Like for example, the example that you just shared about like um, doing dilution in a very controlled manner. I can foresee that okay, once that becomes like more common, like to an extent it should be common sense, but judging from the graphs, apparently it's not. But maybe through like sharing this type of data, it can become more common practice and we can start like yeah that would be an example of how this could impact that segment. Do you foresee like more ways of that?
Yeah, I 100% with what you're saying here. 100% agree with that. And I think the reason why, like, it seems obvious, but like not necessarily every company is following the playbook strictly, is because they can't track the data accurately. Because it's like, first of all, I doubt any DAT has a global view of the markets of all the other DATs companies' data. Just like how we struggled to even get all of the reporting of the crypto holding as well as like the outstanding shares. Like basically, you need two parts of the data. One is how much each company is holding the crypto, and they are not really required to report it every day. And so you may have a delay, and so underpresenting the value they're holding, or they sometimes may sell some of that to have money to buy back share in a crisis mode. So again, like it's really hard to track underlying numbers, and I doubt even like some of the DAS company can even track their own like total outstanding shares and stuff. It's huge. It's truly a struggle, and it's so crazy to think even because like you would think like it's probably a solved problem in stock markets as such a standard place people been trading forever. But really like all the open data API you can find, like Yahoo Finance. There's this one called Polygon.io, now renamed to be Massive.com. Crazy name, but also most of them are basically doing the same thing we're doing here, like step by step, which is scraping SEC filing from texts. And also, if they sometimes have maybe like direct connection with bankers and market makers, they may be able to like aggregate and to get to know like what are the true outstanding shares out there in the market. But yeah, I think again, data definitely will help increase the intelligence for desk company for better management and strategy as well. I agree. I have this idea actually. Curious your reaction as well, which is that like following the standards of like crypto on-chain data, I think there should be a data alliance for digital asset treasury company for reporting. Like if there is a open data API endpoints, all the DATS company can just periodically update per day about the key metrics that they're having will be huge relief for everybody in this industry. But I don't know. I need to like really understand better if why it doesn't exist. Maybe they are not allowed to report before a SEC filing, or there might be some other like regulation constraint. But I would really hope that happens.
Yeah, we've seen it in a couple other sectors, right? Where some companies make an alliance, and it's something we've been trying to. It's a cost we've been trying to further in some segments as well. They're like they're like always like specific things at play in different sectors, like you mentioned the example, right? Like maybe it's not even possible for specific reasons. I also think there's sometimes, companies at the end of the day are also like in competition with each other. So it's always very tricky to navigate that field. Like, okay, we're going to work together, but like in what capacity
Right.
should we? There's like a lot of trust that needs to be built first. It's, you're right. It would benefit the industry as a whole and that sector as a whole. But like, it's kind of like the problem of the commons, right? Like each individual player, yeah, they
That's
might think they might benefit from something like that, but they also like give up certain benefits.
that's right.
And that's the thing that makes it so tricky.
That
Um,
That makes a lot of sense because like putting that into the MEV searcher, how to say context. I know that like people don't want to share their strategy because the moment they share it, people may copy their strategy, and so it's like if they're updating, they're kind of giving away some alpha. But I do believe that like in many cases we've seen this happens in crypto industry where like the better data transparency and the better reporting you have, the more confidence people have in the market for you. And at the same time, I don't know if you know this like anecdotal story where like all the L2s starting to like basically trying to jack up their metrics towards whatever being listed in L2 beat. So it's like once you have a place that
um,
is like shilling point people goes to and check and measure things and evaluate things, it become the de facto, then you kind of can create this like I guess standards for people to work towards that. It's similar to how like Dune has this table called a dex.trades, and they kind of like is the ground truth source for DEX volume or like DEX trading activity. And so if your DEX didn't really account your data in the Doom GitHub repo, does your DEX even exist? Like um, the reporting kind of decides the final truth, that kind of thing.
yeah, for sure. But it like there's also a flip side to it that it makes it, at least it creates like a basis for teams to start gamifying metrics because now they
Right.
know what to shoot for, right?
100%.
So that's maybe kind of like a flip side argument there. But
100% true. Because like that's exactly why TVL become a thing people hate about, right? Because it's like now everybody's incentivized to get more TVL, but what does that really mean? It become
right,
a competitive thing.
exactly. But I think in general, yes, like we benefit from more data being available, and like initiatives like this are so beneficial to the space and to the industry, right? Um, yeah, wondering what's next. are you gonna how is this dashboard gonna evolve over time? Like, it's already very clear that it must be such a mammoth of a project to even set this up and update it and maintain it. So I almost feel bad for asking if you're going to add more to it, but at the same time, we are curious.
Yeah, I mean, it's always a thing that's like you were excited and motivated to launch something, and then later on you're like, oh damn, I have to maintain it. And but I think we're convicted, because like there are truly a lot of work that can be done and like can kind of like correct people's misunderstanding about that. I feel like because my past connections in the industry are mostly hardcore Ethereum protocol researchers or like very fundamentalist or towards like actual builders. Whenever I tell them I'm launching a DAT, people are like with that trolling smile in their face, like, "Oh yeah, cool!" Like it's very. I mean, like they're nice and they probably are like praising for whatever achievement, but like I want to make people realizing that it's not just yeah money game or whatever that just for VC. I think it's creating fundamental value for the crypto community itself because like again if you think about Ethereum Foundation, it's a foundation that needs to stay neutral, cannot talk about the price, cannot really promote anything that drives the price. But at the same time, DAT's company serves as a second foundation for the crypto asset because they're really trying to drive the accruing value for the asset with exposure to the mass adoption in the market, in the stock markets. But yeah,
Right.
back to the dashboards. I think like just hoping to like yap about the dashboards in my like hardcore ETH like following group is one thing for sure, but at the same time, we definitely want to expand the coverage. Right now, it's only 30 DATs. Obviously, the total market cap represented there is very limited. It doesn't really represent the total DAT market cap. We want to
Right.
increase that for sure. We want to probably add asset category if that asset makes sense to stay.
Right.
We also still have work to be done for correcting, for example, like MNAV to also account debts. So debts, sorry, debts, not debts. So like basically some companies also issues debts or like basically borrowing asset.
Right.
So if we don't account those, the total net asset value is also kind of misleading as well. So yeah, there's many other like nuances to be corrected as well there. And also as mentioned earlier, like tracking on-chain activity and yield strategy, etc. Um, so yeah, but I mean, also, Pantera Research Lab supposed to also, go in the hardcore research in the ecosystem as well. So, um, our company is not like how to say tied to one ecosystem. So I'm excited to also dive into like Solana, prop AMM, which was a hot topic in the past few weeks on crypto Twitter, to understand like what are the innovations of implementing that on Solana. One, I want to understand better about all kinds. I mean, like I think you might also be aware of this. Like Solana data is a beast to deal
Yes.
with. I hope to like crack through that and have more people to be able to analyze on stuff as well. Yeah, so many other topics to come.
Definitely. Yeah. Today we talked about that mostly because this dashboard is coming out and that's very exciting. But it was obvious from the intro, right, that your research remit is much wider than just this dashboard. Um, so yeah, exciting what to see what else is to come from the Pantera Research Lab.
Yeah, thanks for that. And I mean, also, I know you guys been building a lot of research in the industry as well, in the Elia research portal. So I'm excited to see if we overlap on any topics there as well.
Yeah, for sure. We're in the same fight, informing the industry and making sure that people can or the participants in the market can make informed decisions, right? Because the way I view it is just that okay, if you improve that, then capital can actually flow towards the initiatives where it's best served that not only have the most ROI but also like serve the industry and serve the global economy in a sustainable and substantial way, um, and hopefully that could lead to like some sort of better world for everyone.
Yeah.
So Yeah, and it all starts, I think, with like you said, like data intelligence and information provisioning, right? So yeah, definitely, definitely in the same fight, and yeah, you can definitely count for more, from more coming from us. Where can people best find for more about you and Pantera if they want to stay up to date on this dashboard, but also all your other initiatives?
Yeah, I would say most of the information will be shared on Twitter. So Twitter was the handle that's displayed right now on the screen would be the place to track. And we have a dedicated website for research lab stuff, which hoping to be more agile, kind of publishing compared to our official branding. Pantera Capital sits as a really big brand, talking to other institutional and like investors from the Wall Street and stuff. So our branding for the company is a little bit more serious, but with the research lab here, we're hoping to like move faster and like track all the voices in the space, faster as well. So yeah, Twitter would be the place, and you can find the research website link in my profile on Twitter.
Excellent. And to be clear, I'm not 100% sure if the handle will be on screen in the final edit. So I'll tell people right now, if you want to follow Danning, you can go to @Sui414 on Twitter.
Yep.
All right. Thank you for the amazing conversation. It was very insightful, went pretty deep. It's very clear that there's so much more to uncover, and this whole this specific segment we talked about today, but it also applies to our industry in general. There's so much development and progress still to be made, and so much things we can still do better. So yeah, it's just exciting time to be here.
Yeah. Thanks for having me. Really great conversation, and looking forward to how the feedback and reaction coming out after this.
Absolutely. I'm sure it will be great. Um, Danning, thank you for being on. Also, want to thank everyone for tuning in. Always a pleasure. If you enjoyed this, you can access more insights in the following ways. For in-depth reports, many of them publicly accessible, you can join our research platform, which Danning alluded to as well. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram group. All links in the bio. And of course, tune in next time. We release a new episode every week, so follow us on X and YouTube. This was Market Cap, where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap.